Welcome back, everybody, to the feature segment. And the feature segment this month is Year End in Business Central. Being the time of the year that it is, December, it's a pretty good topic to discuss. And a couple things that I want to bring to light here before the master, Ken, takes over and really gives a deep dive into the Year End Business Central is you should always have clearly defined month end and year end procedures. You want to have, you do want to do your pre-close year-end reports. So basically the bank account, detailed trial balance, customer trial balance, vendor trial balance, closing trial balance, and some other ones, consolidated trial balance, things like that. You want to do the post-close year-end reports too, which is also trial balance, aged accounts receivable, aged accounts payable, and a few others. Let's see what else I got here. So I then broke it down on how to basically do it, which I'm going to pass it over to Ken because Ken's going to tell you exactly how to do it. It'll make more sense if you say it than if I say it.
Yeah. So let's start with this. So yeah, it is December, and this is when we start fielding calls about what do I need to do to be ready for year end, and what are the steps. And let me start by just allaying all of the fears. Is that you should first and foremost treat the year end. And by the way, we're assuming that your fiscal year is a calendar year, right? Which most companies are. Most businesses operate on a calendar year as their fiscal year. So we're assuming we're talking about the closing of your fiscal year, which typically ends on December 31st. So first and foremost, number one, treat the year end, meaning as you roll into January, just as any other month end, right? Okay. So all of the normal steps that you do at the end of a month, just do those normal month-end steps. Now, you may also, have other processes and things that you need to do at the year-end. You may have a special year-end payroll, or you may have a physical inventory count at the end of the year. Yeah. That needs to get done on like December 30th or December 31st, right? So there are some additional, things that you, from a process standpoint, that you may need to do at the end of the year that you normally don't do at the end of a month. But from a system perspective, a year end, first and foremost, is no different than any other month end.
Now, do you think most companies have clearly defined procedures for month end?
Well. The ones we work with mostly do.
Okay.
But I love your first point is that you should have a well-documented, clearly defined list of month-end procedures, right?
Okay.
So if you don't, if you're not able to say, hey, give me a document or a report or a checklist that shows all the steps that you do at the end of the month and when you do them, then I say that should be step one.
Okay.
Right? Because when you get to the end of the month, you don't want to be having to remember all these things when you do them every month and reinvent the wheel. It should be like, okay, step one, do this, check. Step two, do that, check. Right? And that's how you should really be operating month end. Now, when I say that you should go through your normal month end procedures, right? Let me be clear. The way that Business Central works, you should be able to treat the first day of the next month the same as you did as the 30th or the 31st of the previous month, right?
Okay.
You should never have to wait to post things into the new month, right? Like, I can't post these journal entries into the new month until we've closed out the old month. That's not the case. You can cross over multiple periods in Business Central without any problems.
Okay.
because a lot of the reports that you're going to run to reconcile, like your aged accounts receivable report, aged accounts payable report, inventory valuation report, even your bank rec, all those things can be done with an effective date that is in the past. So on December 5th, you could say, I want to run this report. What was my aging as of November 30th? And you could run that report, and it'll say, here's what it was on that date, and then here's what your balance sheet said on that date. So that's the first thing, right? You can cross over and post across multiple months without any negative consequences, from a system integrity, data integrity standpoint.
Now you just have to set up certain users to be able to do that, right? Not everybody can do it.
Correct. Yeah. There's a user setup table where you can restrict users. So once you say, you know what, we should be done with all of our November activity right now, you go into user setup and you change the allow posting from date to December 1st to make sure that users can no longer go back and post stuff into November.
Makes sense.
So that's the first thing is when you're in the first few days of January, you should be still able to process January transactions while still finishing some December activity, whether those are shipments, invoices, payables, journal entries, whatever it is, right?
Okay.
So which I know that's a kind of a differentiator. Some systems that are out there, you can't start doing things in the next period until you've closed your previous period, and that's not the case for this.
So is that a positive in your opinion?
Oh, huge positive.
Okay.
Huge, right? The biggest risk, actually, I mean, that's a great feature. The ability to process transactions across multiple periods and even multiple years at the same time is a huge feature of Business Central. On the other side of that coin is the risk that companies may not be properly closing out those periods like they should.
Okay.
So you need to have a solid month-end process first. So once you have let's assume that you have a solid month-end process in place, right?
Okay.
And you've gone through your month-end. You closed your December month just like you normally do. So now, from a year-end perspective, what are the steps that you have to do? The first thing you do is you go into accounting periods and you create the new accounting periods for the new year. You also create inventory periods for the new year. And then there's a process called close income statement.
Okay.
Which is, close fiscal year, right? And so what this process does is it doesn't actually close anything or do anything. It checks a box on your accounting periods table that prevents you from changing your starting date of your accounting periods for that year.
Okay.
So it's kind of like, what? Why the heck would they do that? Well, the reason is because once you close the accounting, your accounting year period, year for that year, it needs to know that, because what it's going to do is the next step is to run a process called close income statement. And what that does is that basically zeroes out all of your income statement accounts and creates an entry into your retained earnings. So the reason that you have to run this close year process in the accounting periods table is to verify that you're not going to run the close income statement process and then change your ending date of your year.
Okay.
So it's kind of a really mundane type, thing, but it does have importance, and it is relevant, and it is important. But I always there's so much nervousness when I tell people to go, okay, open up accounting periods, and there's a button on the top called close year. Hit that button, and they're like, well, wait, I may need to post more transactions into that year. And I'm like, you know what? Don't worry. all this is going to do is check these boxes on the accounting periods, which will restrict you from changing your starting date of these periods.
Now, every time you have to post, let's say you do the close and then you run the what'd you call it, the income statement job.
Yep.
Now, every time you have to do another, let's say call it adjusting entry, whatever, do you have to rerun the income statement job again each time?
Correct. So let's say you go through your whole year. Here's a totally normal scenario that occurs. So let's say you get to January 20th and you finally have closed out your December month. And you're like, I am done with December. I've closed it out. I've reconciled all my financial statements. I'm done. What we then tell people is run the close income statement process. And what that's going to do is that's going to grab your net income from your previous year and roll that into retained earnings. So let's say hypothetically, for the year, you made $100,000 in profit for the company. The whole company made $100,000 in profit. So you run close income statement, it books that entry to increase retained earnings by $100,000.
Okay.
That's on January 20th, you run that. Now you go through an audit process, or your outside accountant does a financial statement review. And then in March, they come back to you and they say, hey, we've got to go make some adjustments to our previous year. Right? So maybe you do some write-offs of accounts receivable. Okay. You post a journal entry to change your bad debt, allowances, right, or whatever. So what you would do then is you would just reopen access to December 31st in the user setup table for yourself. Go in, record those entries, and then let's say that results in an increase of $5,000 in profit. Once you've done posting those adjustments, you rerun the close income statement process again.
Okay.
And it sees that you've now added 5,000, so it adds 5,000 more into retained earnings and zeroes out those income statement accounts.
Okay. So in my notes, and I have after that, so if there's a GL entry that gets produced from the job, you have to manually post the transaction, right? Business Central will not post itself to the GL.
Correct. What it does is it when you run the close income statement process, it actually generates an unposted journal entry in the general journal. Okay. So you then go in, you can review it, make sure that's what you were expecting, and then you post it. Yep.
Nice.
But you can run that close income statement process as many times as you want.
Okay.
So good to know. To take it to the complete extreme. We had a customer, they went through an audit and they audited the previous 2 or 3 years. So, and based on the audit, they said, you have to go back and restate your earnings from 2 years ago and from last year.
Wow.
And this was like 9 months into the current year. All we did was we reopened access to posting dates for their controller back to December of 2 years ago. They posted some entries into 28, 17. We then reran the close income statement to carry those forward. Yeah. Then they did the entries for 2018 and then reran close income statement for 2018 and then the same thing for 2019, right? So there's never, here's in a nutshell, there's never a point in time in Business Central where you cannot reopen access to a previous period and post some adjusting transactions.
Okay, so what you're basically saying is the best practice is to close the year end when you're supposed to, and then isolate the adjusting entries down the road because it's better for like auditors and things like that.
Well, here's the real reason you want to do that, because if you know that you're going to have some audit or review adjustments to post in February or March or April, you still need to be able to produce an income statement for January, right?
Yeah.
But you don't know what those adjustments are. Well, you're not going to get a good year-to-date number on your financial statements unless you've run the close income statement for the previous year.
Gotcha.
Right. Because what it's effectively doing is the closed income statement is effectively doing a journal entry to zero out all of your income statement accounts.
Okay.
And it uses a closing date, posting date, where it puts a C in front of the entry. So, so your actual closing date on those entries would be C 12/31/20, for example.
So it puts a C, you said, in front of.
Yeah.
Okay.
So you actually could do a search. You can say, I want to isolate all my system closing entries. And you could actually search for like C 12/31 entries and see what all those were. Yeah.
So year end doesn't seem too complicated to me. Obviously, I'm a marketing person.
Right.
But where does, in your opinion, I guess, where does the confusion come in then with so many people having issues with it? Is it just they don't have their proper procedure set up and they just are pretty much lost in the beginning?
I mean, if I had to, I mean, well, first of all, there's a lot of other things that are non-Business Central related that have to be done at the end of the year, right?
Okay.
So when a lot of people talk about, well, I got to do my year-end process, that may include, right? You have to do like 401k reports, some payroll things, maybe HR, vacation analysis. So there's from a finance and accounting perspective, there's a lot of things that go into going through a year-end process, but from a system standpoint, specific to Business Central, it's a very simple process. And I would say the reason people have a hard time with it is because they only do it once a year. Right?
So they're not used to it and they're making mistakes. I gotcha.
Yeah. So let's say you went live on Business Central in April, right? Now it's the end of the year. Well, even if you did training on year-end process back in March or April, you don't remember it.
Right.
And unless you have a document that clearly defines what these steps are, which we have, right, called Business Central YearEnd Procedures, like a template, training template, you wouldn't know where to begin. What do I have to do? Can I start posting transactions to the next year? So we always get a lot of questions just because it's something people only do once a year.
Gotcha.
So a lot of times we're on a Teams meeting with them, doing a screen share, walking through these steps that really only take about 5 to 10 minutes.
Wow. Not too long at all.
It's more training on understanding how the system is designed so that you can post across multiple periods or years at the same time and still maintain that data integrity, by period.
So it's really it all comes back to proper procedures, right?
Correct.
Having it laid out clearly so that you remember when you have to do it the next time and so forth.
Correct. Yes. And again, I've done it probably, hundreds of times over like 19 years. I still, if I get on the phone with someone and I'm talking to them about the year-end process, I still open up this year-end procedures document.
Yeah.
Because why would I try to recall this off the top of my head?
Well, you're a CPA.
Yeah, but I'd still rather just look at step 1, step 2, step 3. That
Right.
Make sure I'm remembering.
Yeah, better to get it right than wrong, for sure.
Yeah. So I would say, if the number one takeaway is you can post transactions across multiple periods and multiple years without issues. Treat your December or your final period, close as a regular month end, and then go through the process of closing your year and running the income statement. There you go.
Call us if you have any issues.
Yeah.
All right. So
yeah, it really is just a matter of understanding what the steps are, and then keeping that document handy so that once a year, when you need it, you can refer back to it and run through those steps real quick.
Gotcha. Well, that's a lot of finance. So who's ready for some beer reviews?
Always.
You want to go first? Or would you like me to go first?
I'll go first. Let me go back to my shoot. Where's my
I'll tell you what, this beer, it's got a unique quality that I'll talk about when I give my review that the other beers that we've had just did not have.
Ooh, look at that. Yeah, so what I would say is, again, I was nervous when I got it because I'm like, I don't know, coffee stout could be really
right.
And despite a lot of the scores, I think so. So I didn't go through some of the feedback that I found on BeerAdvocate.com, but let me just read a couple of them and then give you my opinion. Pretty mild stout with coffee. Aroma of coffee, taste is smooth, good mouthfeel, no bitterness, acceptable, but could use more coffee in the taste. Light coffee, roasted malt, but not very strong, somewhat thin for a stout, right? So those kind of come across like they're negatives. But for me, those are all positives.
Couldn't agree more.
I really like it. Again, a coffee stout's probably not going to be my go-to. I'm going to go only because I know I haven't assigned this number before. I'm going to go 83.
Nice. Yeah, I think those are positives too, what those people said. I think if it had more coffee flavor, it would take away from the little bit of beer flavor that you get into it or get from it, and it would overpower it and kind of taste like a bad cup of coffee, I guess. But I think they've got the mixture right. For me, this is the only beer. Now, we've had beers where we had that chocolate beer, and as it warmed up, or when it was cold, it tasted good, and then as it warmed up, the chocolate flavor really came through, and it was like a bad chocolate flavor, in my opinion. So this one, when it was cold, I got like a mixture of beer and coffee. Perfect, in my opinion. The mixture was really good. As it got a little bit warmer, it tasted kind of more chocolatey to me, but it was really good. And now, as it's getting warmer, I'm down to my last sip with this bottle. I'm getting a lot of coffee flavor. So it's the only beer that we've had on this podcast, in my opinion, that has gone through more than 2 stages of flavor changes as the temperature is decreased, or I guess increased the warmth with it. So, but I like it. I don't mind it being a little bit warmer. I'm going to give it, man, we've had some good beers lately. I'm going to go solid 84. 84.
Yep.
I like
it. Yeah, I always try to picture, like, if I opened up the refrigerator and I saw like a bunch of beers and this was one of them sitting in there, what's my thought going to be about grabbing one of those? And I think I would grab one on a day like today,
Yeah. Fall beer, cold winter beer, for sure.
Yep.
Yeah, yep. I mean, if you put this in there with some of these other beers like pumpkin spice beer and some crazy stuff like that, I'm definitely taking this over that. I would probably take this over certain beers like Miller Lite, Bud Light. I 100% take it over Miller Lite, Bud Light in the fall and winter seasons, for sure.
Right. You know what? And again, I'm kind of the master of the segue here. But as I think to the score I just gave for this Lakefront Brew, I think, okay, I gave it an 83. I'm thinking, I wonder what I gave that Samuel Smith chocolate stout, because I think I like this one better. But now I'm nervous that I gave a higher to the other one. So I'm really, really looking forward to next month, at the end of December, when we do our 2020 Year in Review podcast to just recap and talk about the highlights and lowlights of 2020 and Business Central and all the fun that we had doing this.
I hope the same, that I did not score this one lower than that other one. I hope I didn't. But if I did, and if you did, it just goes to show that we're really not professional beer tasters.
Yes.
We're just, professional
Hey,
beer drinkers.
Michael, if everyone hasn't figured that out yet, God help.
Right? We can't come up with the crazy reviews.
Yeah.
Oh, too funny. So, I want to thank everybody for tuning in. And, Ken alluded to that we're going to do a special 2020 year in review podcast at the end of this month. So, be on the lookout for that. We'll talk about some of our favorite topics, some of our favorite beers, some of the beers that we couldn't stand, and whatnot. So thanks for doing this, Ken. I appreciate it. We are doing it remotely because, I got exposed to COVID, but I feel fine. I don't think I have it, but good to quarantine. So I appreciate you doing it remotely for me, Ken.
Yeah, no, I'm glad to hear you're feeling well, and happy holidays to everyone out there. I hope everyone is able to wrap up the year on a positive note, and let's look forward to 2021.
Yep, 2021 is where it's going to be. All right, everybody. Don't forget to share the podcast. We'll see you guys next month.